The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. I have some great news, boys and girls. You're not going to believe this, but I got my MTR senior card today, and I'm allowed to go all over the island of Hong Kong, Kowloon, Central, doesn't make any difference, New Territory, Airport. Are you ready? For $1.50. This is unbelievable. But if you want to go first class, what you want to do is to take the flight from Hong Kong to Dubai on UAE, United Emirates, and you get for two people, $30,000. You get your own suite with your own shower. You have your own bed and your own chair and your own TV for only 30 grand. Not too bad for two people. So anyway, I've got two Hong Kong dollars, which I believe is about $1.50, as I recall. I'm not even sure, but it's pretty close. We'll see. Anyway, what we want to do, yeah, see, one Hong Kong dollar is 75 cents. It's what, yeah, well, that's two Hong Kong dollars, only a quarter? Oh my God. Sarah just told me it's only 25 cents. That's not too bad. And you know what's really amazing, folks, is when you look at the MTR, if you ever ride it here, it is so clean you can't believe it. There's no graffiti. There's no human waste around. There's no food laying around or anything like that. And the answer to that is there's so many people moving so fast, nobody has time to do anything other than get from A to B. That's basically the bottom line. But it's really quite clean. Okay, let's move on to the markets. We're taking a look at the DAX. We had a pretty good rally, backed off quite a bit. We do the same thing here. If you'll see the same thing in the FTSE, we got a potential for an ABCD pattern coming in. By the way, we're going to have Norm Winsky as our guest at the break, which is very important. But there's one chart here that I really think that we really have to pay a great deal of attention to. And if I can just find it, I want to bring it up to you. And that's not it. Give me 1 second here. Oh, heaven forbid. What did I do? This is it. Hold on, folks. This is the chart of the NASDAQ. This is the one that's been getting hit. And we had a 300-point move overnight. So if we go below 6,400 in the NASDAQ, we're trading around 65 and change now, I believe. But if we go below 3,400, if you look to the left there, you'll see that little red box where you got 127, 1.618, 1.618. If we get below that, you're looking at trouble in River City. And with that big down move that we had here, we had a nice little 382 rally in the middle of the night, and now we're coming back down again. So it looks pretty interesting here. So be careful, because if we get below that, we're looking at some pretty serious correction coming to this. Remember, we have a holiday here on Good Friday, and the market has a better than 70% chance of closing higher tomorrow, because it's a holiday, and markets have a tendency to close higher the day before a holiday. So it's going to be an interesting holiday, to say the least. The news that comes out, I really don't think it means anything at all, folks. The news follows the trend, and that's pretty much, what you're looking at. And one of our denters sent a really nice article about the Dow theory. I wanted to bring this up to show you that it's actually still working. And if you'll look at this chart, this is just about exactly what we've had happen here in the Dow Jones. This is a chart going back. This is actually a predicted chart. But if you'll look at this chart, you'll notice that there is a big ABCD structure, taking it down to 2350. Well, the ABC structure on the real Dow is at 22,500. So this is the one that was suggested a couple of months ago, and now we're looking at the one in real life comes in at 22,500. And I can bring this up to show you, because we did this over the last weekend here to take a look at it. It doesn't have the big swing from yesterday in it, because of course I did this on Saturday, and then we had a rally on Monday and Tuesday, and now it looks like we're rolling over again. But it's still real early in the morning, and you don't know what's going to happen, especially on this opening price part that we had. We just made a 78% retracement from the low last night at 2,600. We rallied 25 handles. We came right down and stopped exactly at the 78% level at 2,607. We start going back below that, then you're going to be looking at something really nasty on the day. So that's a real key figure. Regarding the gold market, we've been, been on the short side of this. Of course, we've been watching it. We're seeing some really interesting patterns unfold now in the gold. I think we've got a little bit more to go to the downside, but there is some strong support at the 1330 level. There's a really big ABCD pattern there that completes really nicely. And if you'll see this, if you'll pull this up, you'll be able to see the old chart that we did, and you'll be able to calculate the numbers yourself. And yes, the bond markets, David White just told us the bond markets close early tomorrow, 2 p.m. For the holiday. And, believe we're going to see some swings in those bonds, folks, that are going to just scare you. This rally that we're having is what I think is a flight to quality rally in bonds, but we'll cover that in just a minute. But anyway, the gold, we had one heck of a good rally. If you look at the last correction we had between the 21st and 22nd of March, that correction was only $24. We've already done that in the market right now. So, in fact, we're right at that same level. So if it stops right here, it's still got a chance. But I believe we're going to get just a little bit lower in the gold market, down around that 1330, 1329 level, and that will be a pretty good spot to look at it. Now, this morning, right before the opening, I'll post this chart. This was one of the things that one of our dinners talked about this morning, and that is we had that really nice ABCD pattern at 2627 in the E-mini S&P, and we already dropped 16 handles into that. So it's important of that level that we're looking at, which is the low is 2607. If we go below that, that's a 78% of that overnight range, and that would be what I think would be relatively tough to overcome. So that's the main thing. The other one, folks, I know Facebook is under a great deal of pressure. And, if we get Facebook below this, I don't know where Facebook is trading now, but if it gets below the 26, hold on just a second here. Well, $13 in Tesla is not a lot of money. But if we go below 146 in Tesla, let's try it again, Larry. If we go below 146 in Facebook, it's going to be negative. We're trading at 152, so it's $6 away. That shows you that 1.618, is a, very important number. And the fact that we had huge volume. We'll take a little break here. We got Norm Winsky coming up at the break, 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and wanted to take a minute here to talk about Bitcoin. We'll have Norm at the break here. Norm Winsky will be our guest at the break. But this chart on Bitcoin is beginning to look really ominous to the downside. We're almost ready to break below the 78% level, and you can see the last four-day rally we had only went to a 382 retracement. And if you can just imagine what this is going to look like as far as an ABCD structure, your A being up there at, say, roughly 19,500. Your B level is down there at 6,000 even, and then it rallies up to a 382 retracement over a period of a month, and now it's headed down. Boys and girls, if you take that C level, which is going to come in at 11,500, and you subtract the A, hello, boys and girls, you're looking at a price of Bitcoin of $2,000 a share. Now, I know that's still a lot, but that's going to get back a whole lot of what they've accomplished here in Bitcoin, over the past couple of years. And if it fails 2,000, you could be looking at something that could be, quite disastrous. But the ABCD structure on this does measure down to around $2,000 a share. Now, it's not going to go straight down. Well, I don't think it is. But, that's what the ultimate target will be. We'll have to let history decide, what it looks like. But it does have that potential without too much trouble. Now, we're coming into the Easter holiday, and this was a time when we had the, hold on one second here, when we had the, when the eating habits shift from beef to pork, and that's just historical thing that we're looking at. But I wanted to bring you up to date on what we're looking at here in August cattle, because we're really close to a really monster pattern here in the cows. They're getting hit, which is they're supposed to be very seasonally weak into the Easter weekend, and then they turn pretty positive. So if you look at this big ABCD structure that we've had here, we've been straight down, folks, since the 20th of February. That's well over 5 weeks. And we're down near that old double bottom at 103. So there's a really strong support at 102 and change. And, of course, if that fails, it's going to go a whole lot lower. But it's going to be very, very interesting if you keep an eye on that cattle. Now, one of the things that Rich Anderson and Cy Monley do is that they talk about these different services that they use, and one of them is Hales Trading. It's all about cattle and stuff. I just wanted to let you read the front section of this, the first paragraph, because it's about how one of the hedge fund managers comes in the last minute of trading in cattle and pushes them down 100 points. I mean, that's just silly. I don't know how that's what they're saying here, that they push it down really, really quickly, and then of course when all the the selling is out of the way, the market bounces right back. But why anybody would come in right on the close when there's less liquidity than any other time is really amazing to me. And the only reason I think that they could do this is they want to see a settlement price in cattle at a lower price than it closed the previous day. That's the only thing that I could think of. So let's keep an eye on this cattle contract here. I know a lot of you folks don't trade it, but we're going to be watching it just from a technical perspective, much like we're doing when we look at Bitcoin. Haven't put a trade on Bitcoin, probably never will, but technically it's acting beautifully, and that's what we're trying to see here. If it wasn't acting beautifully, then I'd bring that to your attention, but right now it looks absolutely awesome. That's the only way you can really describe it. Now another market that they've been talking about here in the den this morning is the price of Amazon. The fact that you're talking about a market that went up 70 and down 70. It goes up 70 on Monday and down 70 on Tuesday. Who knows what it's going to do today? So let's pay close attention to this, because this is very unusual when we see these things, moving like that. And the other one that's interesting, and this is because of our watching the stock of Deutsche Bank, because it reminds us so much of Lehman Brothers, is this banking index. We had this big rally on Monday, and then we gave it all back on Tuesday. So if that breaks below that 103 level, that's going to be a very, very bearish pattern in the banking index. And I still believe that we're going to see news coming out of Deutsche Bank sometime in the next few months, probably in the fall, that yes, we can't handle some of the derivatives that they're in, and then someone's going to be left there holding the proverbial bag because someone had skin in the game and somebody didn't. And that's the main thing that you want to be looking at. Look, Amazon's trading at $14.31. That's down over $200 this week. Now, $200 is not a lot because it's a $1,600 stock, but stop and think of it. 200 large is that's not a small feat to cover. Now, there's one other thing that someone asked about, one of our listeners from Turkey, and they ask about, it's not Istanbul, it's Ankara, but if you'll take a look here, we'll get this up here so you can take a look at this chart. This happens to be one of the software type charts, I believe. But if you'll notice, from the low we made in September to the high they made in November, the market has retraced 78% of that move. So these markets still have ABCD patterns, even though this happens to be very heavily traded, by the way, on the Turkish Stock Exchange. So as long as you have good volume, you're going to see these numbers, because you'll just see the repetition that we have with those, and that's what I think is the most amazing part of this, because I look at these numbers each day and they still amaze me. It's just really hard to believe that no matter where you go, you're going to see these numbers unfold, but that's what nature's all about. So we'll pay a little question about it. I wanted to show that chart of Lehman Brothers because we have a tendency to forget history, and this was the largest single bankruptcy the United States has ever had. The stock went from 135 in 2005 and went to tapioca in 2008. So a lot of people lost a lot of bread on that one. And this movies, Margin Call was one of the movies. So it's they'll probably be doing a movie about Deutsche Bank sometime in 2019 or 2020. This stock has major problems, folks. It just doesn't want to rally no matter what they do to it, a new CEO or whatever it is. It's got major problems, and I believe it's related to all the interbank, credit risks that they have on some of these other things. In other words, they have a position that they're stuck really badly in, and they can't really get out of it. And that's why the price of the stock has been hit. If you remember, just a few months ago, they offered you a 35% discount to buy the stock when it was trading at 20. Well, that means you bought it at 16. And where is it now? 13 and change. You know, that's not a good deal. That goes back to what Grandma used to tell me when she was feeding me the oatmeal when I was 4 years old. And she used to say, every time you have the urge to trade orange juice, go lay on the couch until the urge goes away. And the same thing is true. If it looks like it's too good to be true, you can bet your sweet Bippy that is going to be true. Now, I want to take a quick, Norm's coming on. Boys and girls, get ready for the bonds, because when they come knocking, it's going to be a terrific trade. So watch it really closely at this 147, 148 level in bonds. It's got something really positive up there for a downturn. So we got to watch it. But if the market gets weak, possible flight to quality. 877-927-6648. Stay tuned for Norm Winski.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Norm Winski on the line. Norm, are you there?
Yes, sir, Larry. Good morning.
Good morning from Hong Kong, my friend, and I'd like for you to take the reins. You are in charge.
Will do, sir. So I thought I'd review. I think it's good to review what when I was last on your show. Well, technically, I did a walk-on. Remember the old days with Johnny Carson and Bob Hope would walk on unscheduled, that kind of thing. We did a walk-on back there with Mercury retrograde. I'll touch on that too. But my last official visit was on the 16th, ahead of the new moon, and we had a big cluster, a planetary cluster of events, and so I'm going to go over those. Here's the notes I showed on when I was on here on the 16th, and we sort of have a theme of the grains and your U.S. financials, which is U.S. stocks, bonds, and dollar. And let's see what else we have here. We have a little sprinkling of gold, and the corn was indicated, so I've got that covered under the gold grain umbrella. And then we had a new moon in Pisces, which was indicated for, take a look at oil. And then I had some in strong indications to look at coffee. So, and then of course we had on the 22nd, night of the 22nd, we had Mercury turn retrograde. So we'll be looking again at the grain. So there's my additional key dates I had for the stock market based on other methods like market math, which is sort of a Gann method where you look at square numbers like 13,004. That's music math, and but different things that Gann would have liked, different mathematical things. Fibonacci time cycles. I have astrological analysis based on turning points, the S&P 500, and then my traditional astro analysis. So looking ahead here now on page 2, there's your corn chart, and just ahead of the new moon. We missed it by a day or two, but we're near the not too far off the highs there with that green arrow there. You see that? Mm-hmm. So here's the even more interesting, Larry, I think you might find, is that on the 23rd, which was the Mercury turn retrograde on the night of the 22nd, the next morning, the corn made a nice little spike low there. You see that? Right where that second green arrow is, right there. Here's your beans. Beans are in a beautiful channel pattern right now, and there's your little mid channel top there, right near the new moon, 16th. Mm-hmm. And then we came down and made a little bit of a low at the bottom of that channel on the 23rd again, just like the corn. Here's your T-bonds. You were just talking about those, and all my charts are as of last night. So I don't know if they did something this morning to make me look stupid or what, but but here we are.
You're
at the
okay,
top.
Norm. You're okay.
But I'm sure you've had that happen before, where you thought it was something happened, and then you had a big move overnight, and then then it's all out the window, So anyway, here we are at the top. Here we are. We made a nice top here on the 16th with the new moon for the bonds, and then they pulled back, and then we're back up to the top of the channel. Here's your U.S. dollar. It was off by, I think, 10 cents in about 2 days. Made a little top there, for a day or so. Popped back up and went about 10 cents higher on these little double top there, and that was that. And then it's been down ever since. Here's your crude oil. Because of the new moon was in Pisces, the sign of the big water, the big liquid. There you go. Now, this is sort of the high, when these are working 70-80% of the time, you're usually looking for a higher or low. Occasionally, 10 to 20% of the time, we get, like a triangle, wedgie pattern. And so here's what the crude oil did that. It was getting narrower and narrower there, right there at our key date of the 16th. And we broke out of the wedge to the upside, and then we had a nice rally going up. And it looks like it might be a little bit sort of showing some loss of momentum here on the upside now. Having a little trouble there. Here's your gold. I know you like the gold, and there you go. Now, a nice little bottoming area there, right near the new moon. Here's your coffee, and that made a nice little short-term low there, right near where I was looking for, right around the 16th. And here's your S&P when I came on your show for that 2 days leading up to that Friday. That was a Friday. We went into a very narrow range there, and I said, well, we're kind of at an inflection point here. Since it was mid-range at that time, it was hard to say whether we were at a high or low, because the way this works, usually you're looking for an extreme where the market's at a high or low, and then most of the time, 70-80% of the time, it'll reverse. But when you're smack in the middle, it's hard to say. But what happened here's a nice trend line right here. You broke to the downside, and then we, as you know, we went down, down, down. All right, now I'm going to cover you every now and then, talk about the Bradley model. I have my own version. I started I love the fact when I stumbled on the Bradley model, but back in my college days there, loved his concept of being able to do that, but I didn't like his parameters. I thought his parameters were way too wide, and he left out certain planetary factors and so forth, so I've been tinkering with it and so forth. And also, so anyway, my many times on your show, Larry, thank you very much. I often talk about my top planetary events that I like the best. There's one category that's at the very top there, and that's when the planets go direct or retrograde. That's called station point. That's a geocentric from the point of view of the Earth phenomena. And then we also have when the planets get to zero latitude. That's a heliocentric thing. As the planets go round and around the sun, they are like horses on a carousel, and they also go up and down. And when we get to that midpoint, even roughly with the sun's equator, they hit their highway called the ecliptic, and that's an important energy point. We had March was a deluxe month, and we had 4 of those for March. So here we go. We have one there on the 5th. There's your dates for the month. Here you go. By the way, Bradley never covered any of these points, and these are probably the points that are screwing up your Bradley model, because they not only have the ability to forecast a change in trend in the market, they also seem to have an ability to invert the energy. So when you're going along and go, oh, this Bradley model is working really well for the first 2 weeks of the month, and all of a sudden, boom, now all of a sudden it flips, and it's like a mirror image, then this is probably one of these guys doing that, So here we go. These little rare arrows are my top planetary points for the month. There's Mercury at 0 north latitude, and look, you get a nice little top there, and back in the early part of the month, it was a 30-handle pullback. Oh, that was when, what's his name, Cohen left the White House, and everybody was panicking. Oh, my God, Gary Cohen, that's his name, left the White House, and we had a 30-handle pullback when that meant something. And then we had, I went on your show, I think, somewhere around there, or talked about it, that Jupiter had gone retrograde on Thursday night the 8th, and so these usually all work within one trading day, or they're wrong. And so one trading day later would have been into Friday or even Monday's opening. And there we go, the Dow top there. The S&P, not quite as good because it did go a little bit higher into Tuesday's opening when we got to that 2802 level. I was looking at my updates for the 2800 level, and that's where we topped out. And here's your Dow Jones going down, down, down. Then the next big point was Mars, got to 0 latitude. And that was on the 9th, later on the 19th, the next day. We made that nice little low there.
We got to pay a few bills, Norm. Can you stay with us?
Absolutely.
877-927-6648.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks. We're talking with Norm Winsky of AstroTrends. Norm, we have a question for one of our listeners about your course that you have. Could you give us a brief description of what you're doing with that course that has the double your money back guarantee for TFNN listeners?
Can we do that toward the end? Because I want to finish.
We want you to be happy. We want you to be happy. Go right ahead. You've got the mic. Go right ahead.
And those folks can call me too, you know. So anyway, so I was going over my version of the Bradley model here. Here's the trading days of the month for March, starting on the 5th and so forth. And then we had these key top planetary events of the day, of the month. And we had just done Mars at 0 latitude. And you see here how within the one day, we made that nice low there, and then we made the nice rally there. Then we got into the Mercury retrograde zone. And there's Mercury retrograde right there, and that was a killer. And then the next morning, over the weekend actually, we made that low, and I had a huge cluster, planetary cluster, plus we were in the Mercury retrograde zone for a reversal, and that's what happened that Sunday. And we had some of the media outlets were saying this is one of the biggest rallies in a decade or whatever. I think maybe only on a closing basis, but it was still a huge rally. And now we're here's where we're at. You know, here's the black. Maybe I should explain the blue line. It was my forecast that I did back in February. I do these weeks, a couple of weeks in advance, you know. And then the black bars are the actual Dow Jones 10-minute bar chart overlaid on top to see how we're doing, you know. Okay, so now let's move ahead. Next page. Here's what's coming up into the future as we gaze into the crystal ball. Crystal ball here now. Here, everything. You got the next big cluster is coming up this weekend. You got the shortened weekend here, 4-day week. So Friday we're off, and so here you go. After the 29th, AC after the close, got all the stuff going on here. This has got some big cycles for the U.S. Very positive on this one, but on this one, very negative. So we have huge cross currents with big positive, big negatives for the U.S. That probably will be some big whipsaws going into the weekend. We also got the full moon coming up here this weekend, and so whichever way wherever we land in terms of if we land at some extreme near the high or near the low of the range of the channel, they're probably going to reverse on Monday. So, and you know, for example, I understand I listen to your show every day, Larry, and so I know that there's some big grain report or crop report coming up here over the weekend. And
planning intentions, yes. Mm-hmm.
Well, there you go. And so all the grain people are excited about that, I guess. And so it's probably all going to, whatever that report is, the market will look at it for a little while and then say, okay, now let's go back the other way, right? Probably, right? So there, it's already, it's already in the market. You know, I'm sure you heard that one 1,000 times, right? All right, there we go. So, and so here's your markets you want to be looking at. Here's your shopping list. Doesn't mean that you're going to have a great, this is a sort of opportunity finder. Doesn't mean that it's going to work out. So first you look at there's your shopping list, and then you look at the market at the time toward Friday's close, Monday's opening, and see if you're at an extreme where you might get a reversal. So we got U.S. stocks T-bonds, U.S. dollar, and possibly oil. And then we also a little bit of the same, more of the same there. This is more of the same. We got the full moon, round up the usual suspects, which are your financials, grains, and precious metals. And then we have it's probably more of the same. That's it. So, and yeah, that's it. So that's pretty much it. And we don't even need to look at the charts now because we already looked at some of the charts, but it's not going to really matter for, until we get at least through today and probably late tomorrow. That's when you want to look at your charts. But now you have your shopping list, so you'll know when and where to look. That's the deal. Now we're going to go ahead here now. As a special extra bonus, I'm going to talk about day trading with the planets. So here, I have a forecast page for every trading day. I do these weeks in advance. So here we go. This was yesterday. Here's for March the 27th. Following is the forecast page for March 27th. My publication to do this intraday trading is called AT Daily, and I list all the planetary events for the month that are relevant, and they give you the exact times. All times are U.S. Eastern time. That's like New York, and if you're not familiar with the time zones. And so there we go. And so I give you these times. You can scalp these times. There's probably a 7 to 80% batting average on these. And we have three groupings. With the GAAP is for geocentric aspects all day. That's from the point of view of the Earth. We have HAAD, which is heliocentric aspects all day. That's from the point of view of the sun. And then we have the USAD, which is the natal chart. That's when we took a snapshot of the planets on July the 4th, 1776, and look at the planets now in relation to those. So now over here on the left-hand side, we have our time scale here, 10, 11, 12, 1, 2, 3, 4. And then we have our price scale on the going up and down here. I've been doing this since the 70s, and I started out with the Dow Jones because that's when, back in those days, that's where you had the most data available, and so I've been doing the, and then the S&P up until about a month or so ago, you could just move the S&P, the decimal over on these numbers one's place, and you could use it for the S&P. Lately, the S&P has been trading like the old Dow Jones used to be, where you had about 100, you could have $100 range, all right? All right, here was my forecast. I draw this blue line weeks in advance. Probably did this about the third week of February. And then we go down into about 11 o'clock. And all these times I have the top times of the day are highlighted. So number 3, 11:12 a.m., that would be right there. That was Mercury lining up with Venus there. And then also have these blue dots on the line indicating change in trend points on the line for the forecast. So now there's your forecast. Let's go look at the S&P 500. What did it did? Here's your S&P 500 E-mini yesterday at day session format. And so one of the interesting things that happened yesterday, we made a high at 12:05 p.m. Eastern time at 2676. Okay. Then it topped out there and dropped into the close about 80 handles. That's $4,000 for the folks not familiar with that. Now I'm going to take the same chart, and I'm going to overlay it on top of my forecast and see what happens. So here's the S&P E-mini 1 minute bar. That's a 1 minute bar chart we were looking at. And and then the black bar, I turned the blue bars into black so we can see them better against my blue line, and there they are. So there you go. And there's 12:05 was that guy right there. Number 21, 12:05. Mercury is making a 120-degree angle to Venus heliocentrically from the point of view of the sun. And so there was the top, right where my blue dot was at the high. And then we went down, 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 just like my blue line said we should. So it was pretty good. All right. So now we're going to, by the way, I know Larry preaches that you don't want to sit there and look at the screen all day long, right, Larry?
Oh, yeah. I agree with that 100%.
And so I got a solution for that. Let's say that you were waiting for the train and you go down to the train station. You don't have a train schedule. You're going to be standing there all day long wondering when the train's coming. That's like staring at the screen all day long, you see, because you don't have the schedule. The planets give you the train schedule. They'll tell you when you should be looking at the market. Look at that. This told you that look at 12:05. You were at the high. That turned out to be the high of the day. So if you have a schedule, you can know when to look at the market.
We got to pay a few bills, and stay tuned, and we want to talk to you about your course, Norm.
Very good. I'd love to do that.
877-927-6648.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Basil Chapman has just announced that on Tuesday, April 3rd at 6 p.m., he'll be hosting a special 90-minute webinar for all of his subscribers titled The Power of the Fourth Highest Peak, the Peak D in the Chapman Wave. During this 90-minute live webinar, Basil will be discussing how to use the fourth highest peak, the Peak D, as a heads up for either a directional reversal of consequence or a momentary pit stop for further gains in the Chapman Wave. He'll also be going over what the weekly and monthly implications are for the key indices with their peak Ds and even peak Es, together with the H pattern in the Chapman Wave that he's been following for weeks with his subscribers. Now is a perfect time to sign up for Basil's daily trading service, The Opening Call, while gaining access to the April 3rd live online webinar. Remember, all new subscribers get a 30-day money-back guarantee, so you have nothing to lose. For all the details and to sign up today for Basil's Opening Call, visit the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We're talking with Norm Winski from AstroTrend. Norm, you want to tell the folks a little bit about the course that you have?
Yes, sir, in 10 seconds. I just want to finish up on this page here. I'm showing the intraday stuff. All my stuff may look complicated to you if you're not familiar with these symbols, but you can learn these in a short amount of time. I teach these in my free class, and once you get past that, there's nothing in my letter that if you made it through the 5th grade, you got it made in the shade. You don't have to be smarter than a 5th grader to do this. And this stuff, all you have to do, don't need any moving averages. You don't need to count your Elliott waves or whatever. You get to the market's rallying into the key time. Look to sell it. Use maybe a 2-handle stop. And if it goes down into the time, you buy it. It looks good. Looks like it's at an extreme. Use a 2-handle stop. 70-80% of the time, the market will probably reverse there, and you'll have an opportunity to make some money. It's that simple. All right, moving on ahead here now. Let's talk about the free, your opportunity to get a free class and a free letter. I've been doing this for about 50 years, and almost as long as Larry there. And we were teaching the dinosaurs how to trade back in the old days. And anyway, so I got the letter that I've been doing for going on 40 years now. and you can get the free subscription for a month. And I'm going to go through the letter and show you all my different forecasting methods. And then we also, if you want to learn astrology, which I highly recommend, I also have the course, 6-month course, and you can get the whole bundle package where you get the big picture letter, the intraday letter, and the course on a special discount. But the initial deal here is you can get the class. It's a 5 to 6 hour class, and the letter subscription for free. And Larry and I like to joke that it's all free with your double your money back guarantee, right? Just mention Larry's name, right? Tell me Larry's name, right? All right, here's my
I have a question, Norm. Do you think gold and silver higher or lower from here?
I think you need to wait till the full moon and see where we're at. Whichever way it's.
That sounds fair enough. And now we've got to head off to the old sunset, my friend. Thanks for joining us. And
all right.
We'll have you again
soon. Make sure you
soon.
take a look at my contact info there on the page.
It'll be right there. Thank you very much.
Thanks a lot. Thanks for having me on. Bye.
Bye-bye.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.